Thank you, Sri. Good evening, everyone. Thanks for your time today. I know that probably you guys have just finished your work or just about to have dinner. Thank you for joining this webinar, and also thanks to Philips for arranging this. Today I'm going to talk about micro E-mini futures, which CME Group has introduced, the index futures on our benchmark indices for the first time, within 22 years. So the last time we launched the mini futures was back in 1992. So it was quite some time ago. So today, this with this one, we launched this back in May 6th of 2019, and it has been a little over 4 months by now, and we are very pleased to share that this product has been most successful product within 150 years of CME history. So before we actually touch base about our micro E-mini futures, I'd like to introduce our CME Group Equity Index Futures product suite. As many of you are aware, CME actually offers a lot of different listed derivatives. We are futures and options exchange. We do not carry any stocks or ETFs. So among all the different 6 asset classes within Equity Index Futures product suite, we have of course, because we are US exchange, we have a US benchmark index futures and options, which is represented by 4 benchmark: S&P 500, Dow, Nasdaq 100, and Russell 2000. And also we have small minor indices called Russell 1000 and S&P Mid Cap 400 and 500 dividend, Dow Jones Real Estate Total Return Futures. And also because nowadays the sector performances are relatively getting more attention from the investors, because sector wise there are a lot of diverse different various strategies people can actually play around. So we actually offer 11 different sector futures based on the GIGS standard, which is exactly the same as if you're trading ETF, which is exactly the same underlying as S&P 500 ETFs, sector ETFs. So those are the two big part of US equity index futures we are offering. But we are not limiting the scope to the US indices, but we are also offering international indices. As part of that, as you might aware, we also offer Nikkei 225 yen futures and Nikkei 225 dollar futures and topics, and also some of the FTSE components. And out of those, today I'm really going to talk about just focusing on the 4 benchmark indices: S&P, Dow, Nasdaq, and Russell 2000, which is well known to the audience. So to begin with, let me briefly talk about our history of equity index futures at CME Group. We can actually divide this into 3 generations. So the first generation is back in 1982, quite some time ago, when we first launched standard S&P 500. Back then, when we launched the S&P 500, as you might aware, the index level was super low, and it was 1980s. So it was kind of the very first US index futures we introduced into the market. And after about 15 years later, we had to introduce E-mini S&P 500 back in 1997, because part of the reason is that we actually if you actually see this graph, this is actually price chart. And you can recognize the price has been rising quite some time, more than 2-3 times since the initial launch. Because of that, if you if you actually consider how you actually pay the margin for the US equity index futures, not only US equity, but also generally for the equity index futures, you pay the margin based on the equity index level, right? So because of the index level has jumped up so much, we had to introduce mini version so that people can have more access to our S&P 500 benchmark. For the same reason, it has been over 2 decades since we actually introduced E-mini S&P 500 futures back in 1997. Nowadays, if you have recognized, the S&P 500 index futures is trading around 2,900, briefly reached over 3,000 a couple months ago, and then still around a little over 2,900 by today. So meaning that compared to the time that we launched the second generation of S&P 500 futures, which is called E-mini S&P 500, like unlike the designation of this name, like it's not people do not consider this as a mini contract anymore, because the margin level has become like so expensive for the retails and like such a just like an investor like me to access. So it has become more and more institutional market, and we have been like receiving a lot of queries from investors to launch a putty size, so that like a lot of like ordinary people like us can freely like trade the futures, US equity index futures. That was well received. Yep, that was well received, and so we could actually launch this micro E-mini futures this year, May 6, 2019. Amazingly, it was very well received in the market, and the first day volume was 310,000, only day one day volume. We launched it this micro E-mini futures for 4 US benchmark indices: micro E-mini S&P 500, micro E-mini Nasdaq 100, micro E-mini Dow, and micro E-mini Russell 2000. I'll briefly talk about these indices and at the later on. So why we're introducing micro E-mini futures? As I mentioned, like the notional size have increased more than 2.5 times since the launch, since the launch of E-mini futures, the second generation. And as I just mentioned, the retail participants have become slowly priced out, so creating a need for a smaller size futures product. So as the logo, the catchphrase of our CME group represents on the right side of the slide, this is really like smaller size, greater precision, and we provide a maximum opportunity. So let's briefly talk about key features of this micro E-mini futures. So when we actually promoted this micro E-mini futures prior to the launch, we highlighted that something big is coming to equities trading. So this is smaller size, but represents big opportunity, because E-mini S&P 500 futures has been the most liquid equity index futures in the world. But if you want to trade like E-mini equity index futures now, you have to pay about like $6,000 to trade one contract. And that is too expensive for like an ordinary people like us. So we actually slice this contract size to 1/10, meaning that only a slice of the most liquid equity index futures in the world, but you receive all the benefits the same. Only difference is the contract size. And it actually provides a more flexibility, ease of going short, and greater precision, meaning that when you want to actually hedge your cash stock position, you don't need to worry about the big size, because you can be as precise, as much precise as you want, and you can actually express your short view as well, because when market is going down, if futures price and the margin level and the contract size is too big, you cannot easily top up the margin and short your futures. But this one is pretty small, so you can actually easily express your short view together with your long view. And this is 24-hour market, as you're aware, so you can actually express your view 23 hours all day long and all night long. And also it just naturally, because this is a futures contract, this actually provides you a great leverage. Usually CME listed equity index futures provides about 20 times of the leverage, because the margin level itself is around 5% of the notional. Margin level is of course the risk function, so the clearinghouse always determine where the margin should be set. So it'll be changing time to time, reflecting the market volatility and market situation, but generally it's moving around 5 to 10%. So compared to the full notional that you have to pay when you actually trade a stocks or other product, this is still considered pretty cheap, and you can actually enjoy the leverage. And also compared to other stocks, you don't need to it's only futures trading fee. There's no other fees engaged, unlike ETFs. There's that one. Also I'll briefly talk about this further on the next and the next few pages. So which indexes are micro E-minis launched on? As I mentioned, we are going for the 4 US benchmark indices. You are probably very much familiar with S&P 500 and Nasdaq 100 and Dow Jones. Dow Jones is the oldest equity index in the world. It was launched back in 1928, the index itself, before we actually launched the futures product around 1980s. So that is the price weighted index of 30 blue chips of the companies. So many of the Southeast East Asia countries still consider this Dow Jones Industry Average Index as a benchmark index of US equity index. But in fact, more popularity you can actually find in S&P 500 index, which contains 500 leading companies covering 80% of market cap of US equity market. So it's more like a broad-based and cap-weighted index. And it's really generally widely regarded as the single best gauge of large cap US equities. So US and Europe, or still in many of the countries, S&P 500 is also considered as a very good representative of US equity index. Nasdaq 100 is something that more getting more appealing to Asia investors, because Asia investors are usually tech oriented, and we pretty much prefer tech stocks. So this one is a modified market cap weighted index that tracks 100 large cap most active domestic international non-financial companies listed on the Nasdaq market. So good example is that people are usually talking about FANG stocks, which is representative of Facebook, Apple, Netflix, and Google. Those FANG stocks are part of this Nasdaq 100 index. So if you want to have an exposure to those tech stocks, you probably want to trade a Nasdaq 100 index futures. Russell 2000 is relatively unknown to the people outside of the US, but this is really the benchmark, benchmark of US small cap stock index. It's actually part of the Russell 3000 index. Russell 3000 index is actually split into Russell 2000 and 1000. And let's say that if you want to so when market is not volatile, and you want to actually trade the US futures, and you want to enjoy extra P&L, you want to look into Russell 2000, because compared to the benchmark S&P Dow Nasdaq, Russell 2000 represents a small cap, so it tends to be a little more volatile during the day when the stock market is quite stable. And why this is interesting, if you want to have an exposure to the US small cap stocks, you cannot actually buy easily those load all those cash basket easily for the small caps. This one is really a benchmark for 2,000 companies. So instead of picking up all the stocks individually, you can actually buy this Russell 2000 index futures and carry the same exposure to the small index, US small cap stocks. So this is quite an efficient way to trade a US small cap. So to begin, really I'm starting from the basics. This one is the contract spec of our existing E-mini equity index futures, which I believe that you are probably, most of you, if you're trading futures, probably familiar with these contract spec. I'm showing you this because I wanted you to compare what has been changed for micro E-mini futures compared to this E-mini equity index futures. So take a look. This is something that has been existed in the market for two decades. And let me briefly show you the next page. So this is the micro E-mini equity index futures contract spec. Can you notice a big difference here? So what I can tell is that trading hours, expiry, daily settlement, final settlement, circuit breakers, all the rules are exactly the same as E-mini equity index futures. So micro and E-minis, the only difference I can tell is the contract size. So going back to the page, look into the multiplier. The micro, you can see $5, $2, 0.5, and 5. Sorry. E-mini S&P futures, you can see 10 times bigger size, right? Multiplier 50, 25, and 50. So micro is just really 1/10 size of E-mini futures. You enjoyed exactly the same benefit as E-mini index futures. And other than that, like because the contract size is 1/10, maintain like margin rate level is also 1/10. So look into the second row from the bottom, you can see the maintenance margin rate. E-mini S&P 500 is 6,300 as of today, and Nasdaq is 7,600, 5,500, and Russell is over 3,000, which is quite expensive. You wouldn't like imagine to to pay this much of money to trade one lot of futures, right? But if you actually look into the micro futures, so going to the micro futures contract spec, see the second row from the bottom, you can see the margin rate is exactly 1/10 of E-mini equity index futures. So it has become like 630, 700, 500-ish, and 300-ish. So much more cheaper, and it's quite accessible. And other than that, as I mentioned, like settlement price, final settlement price, circuit breakers, every individual rules about like micro E-mini equity index futures are exactly the same and following the E-mini equity index futures. One more thing to highlight. So the micro E-mini equity index futures, the daily settlement price is exactly the same as E-mini equity index futures. It follows E-minis. So again, except the contract size, all the benefits you have is exactly the same. So to give you an idea of the margins, I put an example here to show you what is the how much margin it represents. For 4 indices, on the left column, I show the MES, MNQ, MYM, and MRT. This is yep. So is the M2K. Sorry about that. So these are the ticker codes of those micro E-mini futures. We only put M in front of the E-mini equity E-mini equity index future, so that you can actually easily imagine the ticker code of micros. So initial margin and maintenance margin here, it's as of today. What CME put on the web page is usually only the maintenance margin. What you can imagine is that initial margin is always 100%, 110% of maintenance margin. So you can just multiply by 1.1 from the maintenance margin to get the initial margin. If we actually calculate using the futures price to see how much it takes compared to the notional, you can see the initial and maintenance margin rate represents about around 4.67 to 5%. The most expensive one is Nasdaq because of the volatility. So initial margin takes about 5.5%, but rest is really around 5% or lower than 5%. So with this amount of money you pay for the margin, you can actually enjoy about 20 times of the leverage to trading futures. So here are a couple of additional information about micro E-mini futures. If you have actually already checked the screen for this for micro E-mini futures, you probably have already found that there are plenty of liquidity. It's not only because market participants are already trading actively, but we also try to support the market. We have been running the market maker program to let the market makers to quote two-sided markets during the trading session for both US hours and non-US hours, basically 23 hours on screen. So because of this, starting from day one, people could find the bid and offers, quite tight bid and offers, and plenty of liquidity on the screen. It was not empty from the beginning. Another thing I want to highlight is the fungibility. Just as I highlighted so many times, the only difference is the contract size, meaning that it's actually 1/10 of the size. The micro E-mini futures is 1/10 of the size. So what we are offering to the customers is you can actually offset the position between micro E-minis and E-mini futures, 10:1 ratio. It has to be opposite direction though, and it has to be in a condition that when you are only offsetting the positions. So let's say, for example, you are holding one E-mini S&P futures long, and you have just short 10 lots of micro E-mini S&P futures. Then you can ask your FCM, of course, Philip, that you want to offset your position. meaning that your position will be squared and flat. So this is the fungibility we are providing between micro E-mini futures and E-mini futures. Also, I believe that you guys are already like having an access through the platform that Philip is providing, but also CME Group provides the delayed quote on our webpage. So there are like many different vendors already providing our prices. This is just for your reference, and you can probably recognize that many of them are actually just taking the CME sticker code, except the Bloomberg. So if you ever encounter any problem to find the ticker codes or find the product on your platform, please reach out to Philip. One thing I want to highlight is that about ETF versus futures, or cash stocks versus futures. Many of you are probably already trading cash stocks or ETFs, because that's actually giving you more of kind of stability, and probably you will feel like safer to trade those by yourselves. And some of you are probably having a feeling that in the futures and options are really volatile and leverage products, so probably a little riskier. But there's things that I want you to consider. So key highlights for the index futures is really high capital efficiency. As I mentioned, you can enjoy 20 times of leverage, so you don't need to prepare full notional amount of money to trade index futures. And it's super liquid for 24 hours, and it's super transparent because the exchange, we act as a clearinghouse. So unless the CME actually defaults, your money is very safe. And you get immediate access to the positive variation margin and cheap beta, low tracking error. So all the benefits that you can enjoy together with 24-hour access to the liquid electronic market. The only thing probably you want to consider is the roll, because the index futures has its own characteristics to roll. For our futures, S&P Dow, Nasdaq, and Russell 2000, you have to roll your position on a quarterly basis, which is March, June, September, and December. September roll expire is quite September expires actually right ahead in 2 weeks time. So if you carry the if you want to carry over your position to the next contract, you must roll the position. You shouldn't forget about it. Otherwise, you just get to settled it, and on the expiry. Good thing is that the settlement methodology is not any physical stocks or index. It's just you just receive a cash settlement. So let's talk about cash stocks and ETFs against this index futures advantages and disadvantages. Cash stocks is not classified as derivatives, and you still have voting rights, but instead of voting rights, what you receive is dividends. So meaning that you will face a little bit of taxation issue as a foreigner holding this US stocks. So that's a little bit of headaching unless you really properly consult with your accountant. So otherwise, unlike cash stocks, index futures, it doesn't really the dividend is already embedded in the index itself. So you don't need to worry about the dividends falling into your account, hitting the account, and paying the tax. Also, another thing is that the less capital efficiency is something that I can also highlight. To buy one cash stock, you have to prepare the full notional amount to buy one cash stock. There's no such way that you only prepare 5% of the notional of the cash stock and own one stock. That's not possible. So it's kind of key considerations you have to consider. And probably many of you are already trading ETFs, especially for example QQQ for Nasdaq. This is a good instrument indeed. It's a single instrument in a securities account, and there are really various products offered in the market. But what you have to also compare is that the management fee. Management fee is quite expensive compared to index futures, and it's actually same disadvantage of ETFs with cash stocks. Whenever you want to short or whenever you want to unwind your positions, it's not that easy. You have to locate the stocks. So you cash stocks, you have to borrow, and the borrowing cost will be raised. So that's not something that you want to be bothered when you actually want to express your short view in the market. Whilst index futures, like buy or sell, both directions you can actually freely trade. So that is really like something that you can actually very easily express your view and take the riding the volatility and really gain that, make the profit. So another thing that I want to highlight compared to other vehicles is really liquidity. Yes, again, cash stocks or ETFs are good, really good financial instruments. So you can invest in stocks or ETFs, but think about the liquidity, because the liquidity really matters especially for us sitting outside of the US. Like you cannot stand up whole night every day to trade your stocks or ETFs. This equity index futures, it has really super good liquidity for 24 hours. And I'm actually pulling out only a graph for Asian hours between 8 a.m. to 8 p.m. Singapore time. As much as you do, I also cherish my beauty sleep. So we also we prefer to trade during Asian hours. You can actually carry the same exposure to US equity index futures and look into this liquidity. The orange line represents the percentage of Globex volume, global volume actually trading during Asian hours. On the right side of the axis, you will see it's around 10 to 15% month by month. You might think 10 to 15% of the daily volume trading Asian hours is pretty small, but think about it. S&P 500, E-mini S&P 500 index futures, it trades the daily trading volume is already around 2 million contracts. So meaning that even 10% of that volume is trading during Asian hours, it represents 200,000 contracts. So if you actually compare to other equity index futures in the region, other local index futures, still 200,000 contracts during Asian hours is, I would say, one of top 5 liquid products during Asian hours. And also compared to ETFs, I put a small memo on the right bottom here. So E-mini S&P Dow, Nasdaq, and Russell 2000 futures average daily value traded in notional dollar term has been approximately more than 10 times larger than the combined corresponding ETFs in 2019 from Q1 to Q3. So the liquidity compared to the ETF is more than 10 times larger. Meaning that when I actually speak to the institutional clients, what I always highlight is that you have to think about when you want to get out of your position. Whenever you want to enter into a position, it's kind of easy. But when you want to get out of the position, let's say that there is a market movement, market is collapsing, so you want to really cut the loss. If the market is liquid, there's no issues at all. But if the market is not liquid, you will be suffering from extra loss. So in that regard, futures is pretty liquid. So whenever you want to cut your loss or you want to just take the profits, it's quite easy to exit from your positions. So here, just a brief, wanted to have just a brief glance at what the how the liquidity is in futures market versus ETFs. So if you just compare the E-mini S&P 500 SPY, which is very well-known ETF in S&P 500 complex, futures is trading about 9 times on a daily basis. And for the Nasdaq 100 futures and QQQ, also E-mini Nasdaq 100 futures is trading 10 times larger every day. The Dow is even 27 times larger every day. So let's really talk about the how this micro E-mini futures has been trading and performed since day 1 on May 6th. We actually just celebrated back in August 14th, we celebrated 100 days anniversary of micro E-mini futures and put this a little fancy blue box to all the socials. So To just briefly, take a look, we had 38 million contracts traded across 4 indices in 100 days, which represents 505,000 average daily volume. And the rest 4 lines are representative of those each indices. Micro E-mini S&P 500 average daily trading volume was not average daily trading volume, but the cumulative volume has been 19 million, and Nasdaq has been 13.6 million, Dow has been 3.7 million, and Russell 2000 has been 2.1 million. Every numbers we put here is really just a historical record, really record volume for within 150 years of CME history. So let's see how the market grew up since day one. We launched this on May 6, 2019, about 4 months ago, and you can see the graph here. The cumulative volume since the launch has been just amazing. You can actually see by now, by 100-day anniversary, the cumulative volume was 38 million contracts. By August 30, just up until last Friday, when I pulled out the data, it's over 47 million contracts. So let's talk about a little bit about these performance. So total 47 million contracts traded across 4 indices since the launch. ADV, average daily trading volume, has been 570,000 contracts. Every day it traded about 570,000. And the bullet points below here is all just the description of the records. So on day one, it traded about 310,000 contracts, which was a record in CME history. And we hit 1 million contracts only within 3 business days. That was a record in CME history again. And 10 million contracts traded in less than 20 business days. That was also amazing. Within 1 month, we traded 10 million contracts. That was also CME record. 20 million, 55 days, and 30 million took only 62 days, meaning within only a little over 2 months, calendar months, we achieved 30 million contracts. So we are really with this micro E-mini contracts, we are very happy to see this market growing, and also it's well received by the retail customers. And we are also happy to provide much easier access to the customers to have an exposure to the US equity index, so that they can actually hedge or take a speculative view, or it's really just about the access matters. If you can easily access to the product, it makes your life easier to express your view, and gives you a lot of opportunities to manage your risk portfolio. And again, an interesting part is that when we actually launched this product, we were originally targeting really retails. So that's the reason why we made the contract size 1/10. But when we opened the door, what amazed us was that it's not only retail, but across all the different client segments, we are actually seeing customers are started to trade these micro products, asset managers, hedge funds, pension funds, or security houses, banks, even corporates. They like this smaller size contract. This is actually the contract size is when I actually compare with the regional products, it was even smaller than the mini Hang Seng, so which is quite a a good size to trade. And if you actually look into the global participation, 26% of the flow since launch is coming outside of the US, with trades submitted from 130 countries. So from really it's a really global product. And the volume out of Asia is about 5% in average by now. Again, 5% looks very small, but think about the size. Average daily trading volume is 570,000 contracts, so 5% meaning a lot. Over 14% traded in the extended trading hour session before the cash open, US cash open. So 14% is trading during non-US hours. And so far, since the launch about 4 months, we are seeing more than 52,000 accounts trading this micro E-mini products. We had a really like a record volume day for each index futures, especially in early August when Trump was talking about Trump had raised a more kind of controversy against trade wars, and also when the interest rate, we were seeing the yield curve inversion. So a lot of kind of market events and interest rate side movements provided a really good reason to trade equity index futures as a good hedging tool. And because of that, we enjoyed quite a fantastic numbers here in early August. So you can actually see all the indices set up a record in August 1 through August 15th. And in terms of the total volume, we hit a 1.4 a million contracts traded within just one day on August 7th. So that was just only about a month ago. So let me break it down to the 4 different indices. As I mentioned, we have launched 4 different indices of micro E-mini futures. At the you can see that micro E-mini S&P 500 futures takes about 49% of the daily average trading volume. This one is interesting because when we first launched it in the first month of trading, micro E-mini S&P 500 was actually taking more than much more than 50% of this component, because people were starting from the well-known benchmarks. But in the second through third month, we were seeing E-mini Nasdaq 100, micro E-mini Nasdaq 100 futures really catching up the market share. And it started from 20ish, and now it's taking about 35%. Probably it's also relevant to the volatility in the tech stocks. And if you want to really express your view on the FANGs, Nasdaq 100 is something that you want to take a look, because FANG stocks, a while ago we actually compared a correlation between E-mini Nasdaq 100 and the FANG stocks. The correlation has come up really high, more than 90%. So it's a kind of easier way for you to express your view to trade tech stocks as well. E-mini Dow and Russell 2000, compared to other two, the market share is still 10 and 6% small, but this is again daily volume. So you can see over 50,000 trading on a daily basis for Dow, and over 28,000 traded for Russell on a daily basis. So let's talk about this, because we are sitting in Asia, see how each region is contributing to this daily average trading volume. Of course, in the US is taking about 73%, almost 74%. APEC is a little over 5% in average. But sometimes when the market is volatile, the percentage traded out of Asia is sometimes it actually hits 10%. So quite a good number of transactions are made in Asia, which I'm very much proud of. And this one again, wanted to show you briefly, what is the percentage traded between the regular trading hours, US cash hours, and extended trading hours. So again, you probably feel that okay, most liquidity goes through the US regular trading hours. But again, as I highlighted, the percentage wise, it looks low, kind of quite low, less than 20% for each indices. But think about this is the contract where you actually see more than 500,000 trading on a daily basis. So even 10-20% of the daily trading value, you can actually find plenty of liquidity on screen during Asian hours. So this is about micro E-mini futures I wanted to share with you. We do have education site on cmegroup.com, which actually provides you a really variety of free online classes, including futures and options or micros, and you can probably find really many different courses you might find it interesting. If you want to explore further, you can always reach out to Philip and CME as well. So this is end of the my presentation today, and I hope that you kind of enjoyed it, and it kind of prompted a little bit of interest for you to look into this micro E-mini futures. And if you have any questions, always I can reach out to Philip and CME. Thank you for today.
All right, thank you so much, Mina. It was really insightful on what are the opportunities with the new micro E-mini stock index futures. Meanwhile, if you have any questions, please type them in the question box, and I'll have Mina or I could address them from Philip's perspective as well. If you have any questions at all. These indices are certainly some of the most talked about indices in the market currently. So feel free to have your questions in the box, and we'll attend to them shortly.
Mhm.
All right. So in terms of the fees involved, okay, that's the first question. It really depends on which country you're trading them from. If I have an example, just quote an example for or in Singapore, if you're trading the micro e-minis with us, the commission charge per trade is just $3 Sing. All right. So if you have any other questions, just feel free to jump in and type them in the question box. Mina, do you have anything else to add?
No, no, not really. So like I feel just like if you like if you actually like come up with a question after this session, don't worry, and like you can always send an email to us or like Philip. I'm happy to answer your questions after this session as well. So don't feel pressure about the time as well.
Just to add, if you have any other queries, you can send them to us, or you could just wait for our follow-up email, which should get to you tomorrow, with a link to the recording of today's presentation, so you can revise what Mina has shared with us. If you have any other query, you can send them to futures@philip.com.sg. I'll type in the email address into the question box, so you can send your email um, to us directly, and we can get back to you. Well, if there's no other questions, we will be ending the session today. If you are from Malaysia, you might want to get in touch with our colleagues from across the causeway. To get in touch with our colleagues from the Malaysian office, you can just reach out to them via this email address, which I'm typing in the box. Is philipfutures@poems.com.my. All right, it's philipfutures.poems. Sorry, philipfutures@poems.com.my. All right. If there's no other queries, thank you for being a wonderful audience and for sitting tight and tuning in to why and finding out more about why these indices are really talked about in recent times in the market. All right. Have a wonderful night and see you in our next webinar. Goodbye.